So you have people that say, "Oh, how do you outperform SPY and the 1% or whatever?" Those those data collector nerd quant traders saying, "Oh, you can't outperform." Watch this. Let me teach you daily bias. 80% win rate. This is insane. Watch. Just watch. We're on the daily right now, and you're gonna have your mind blown. What is this right here? A bearish candle. What do we have after? A bullish candle. What do we want to know and learn from this? I'll break it down for you. What is this that we have right here? A fair value gap. Okay, that's not relevant though, but just pointing it out, teaching you guys. If we have a bearish candle on the daily, what we want to see is the next candle tap into the bottom wick of it and take that liquidity. So we have liquidity right here, right? We want to see it get taken and then continue. So we close this candle bullish. So what do we want to see next on the next daily candle? You guessed it. We want to see the top side of the candle liquidity get taken because we closed bullish. What happens the next day? Wow, look at that. Equal highs. It's likely that an ES and S&P was formed, but I'm not going to be able to check that right now since we're backtesting. So what do we have right here? Wow, a large rejection off of that fair value gap that I had mentioned. Okay, so what do we want to see next? We want to see price continue going down because even though we had a rejection that was corrected, we have broken structure on the high time frame, right? This is our BOS right here, and we had closed bearish. So we want to see price close our next candle, not close bearish. We want to see it tap this liquidity down here. Okay. So what happens the next day? Boom. Liquid. That's insane. And we closed bullish. So what do we want to see next? We want to see price tap this. So I swear I'm going to go buy side liquidity. I'm going to honestly type it at the top of my screen. I'm just going to leave it there forever. This is man, listen, we can only get so smart as a human race. You know what I mean? Like me personally, I went to an Ivy League university. I say I'm a pretty smart dude, but there's just some things that just like, do I really need to waste my time doing this? No. Anyways, what happens the next day? Wow, trending up. So we still want to see the same level get tapped, but maybe it won't, but we still want to see this get tapped. Wow, gets tapped, huge rejection. What do we want to see next? We want to see this get tapped because we close bearish. Wow, look what happens. Again, okay, bearish. Well, what is this? Fair value. Look what happens. Rejection. Because like, remember what happens in this wick, right? In this candlestick. It's a lot of indecision and a large rejection. Right? Because we opened here, but we closed right next to where we opened. It's just so crazy again, wow, look, a lot of indecision though. Wow, look what happens next. Okay, boom, take this, move it down here. We want to see price tap into this level now. Oh, doesn't get tapped into. That's one loss out of what? 1, 2, 3, 4, 5, 6. Like, bro, you can't even make this up. So now that we have a daily candle closed bullish, we want to see it. Boom. There we go. Fair value gap gets inversed. What are we looking for now? Longs all day, baby. Right? Boom. And then, since we are currently in a downtrend uptrend, since we have broken structure towards the upside, right? That's our BOS right there. And we do have a fair value gap right here. Here's what's likely going to happen. We are going to go down, fill this imbalance, and continue going up. That's what I want to happen, right? But I do want to see us take this liquidity up here before we do that. Let's just see what happens. Okay, liquidity taken, perfect. Still haven't gotten that retrace yet, but we can move this fair value gap over here now. Boom. Boom. Let's move it over. Perfect. Okay, liquidity taken, haven't gotten the retrace yet. We can move our fair value gap over here now because you always want to target the most recent fair value gap. So I guess we can kind of do this now a little bit. We still have our structure broken towards the upside, so we're still trending up, right? Wow. Woo! Look how, bro, you can't even make this up. You can't even make this up. Look how it fills it, goes right back up, okay? You just, it's amazing how these things work, right? And you have a lot of liquidity here, boom, liquidity, boom, liquidity, a lot of rejection. What do we want to be doing now? Reversing down. Look what happens here, a large reversal. And this is our opening gap. I'll get into what this is in a second. This is a new day / new week opening gap. I'll talk about, you know what? I'll talk about that later. It's fine. Have a rejection, fill the gap, and then continue going up since we are in an uptrend, and take all this liquidity up here. So this is how you determine which way you want to go in your trade. This is called narrative or daily bias. Okay. So the most simple way of putting it is hopping in the daily time frame or even in the 4 hour and checking how the previous candle closed and reacted off of previous higher time frame confluences, right? And I guess the easiest way that I explain daily bias to you guys is by actually doing a full breakdown and analysis of a trading week. So let's do exactly that. However, I'm going to take a quick pause real quick so I can go and use the washroom before I get into that. All right, so let's start as if we were just starting the week off, right? So as you can see here, we end the week on a Friday and we start on Monday. Let's just say we start trading on Monday, right? So let's mark out some of our higher time frame biases. Right here, we have a, higher high, meaning that it'll be our buy side liquidity, right? I'm pretty sure I got that right. Hold up. There will never be a day where this will not mess me up. So we have our buy side liquidity here, and we have a higher time frame fair value gap, aka the daily, that kind of gets tapped into right here. And we're looking for, right, shorts, but not shorts until down here, shorts as in just reversal to fill a, imbalance or take some liquidity. However, this is a daily time frame. We're not looking for daily trades. We're looking for lower time frame trades. So therefore, we want to hop into the lower time frames. So what are daily bias? I'll mark this liquidity out too, and I'll kind of just do this with the trend line so we can know that it's already been swept. Sweep, perfect. Okay, amazing. So here's where we are right now. We just tapped into this high time frame PD array, right? What a PD array is, again, it's a price discount array, premium discount array, aka a fair value gap. Okay, now we're looking for a little bit of reversal to fill our imbalance here. And you guys remember, it doesn't always have to go and draw towards some kind of PD array or confluence. It can just draw towards equilibrium, aka premium and discount, which is, over here. You guys need to keep that in mind. You know what I mean? Like, just because we don't have a fair value gap doesn't mean we're not going to trend back down. We need to go down to be able to go back up. And look at this, we're currently in an uptrend because not only did we break structure towards the upside right here, or rather right here, any type of highs, if you were to go, this is actually pretty helpful for me. I like to keep the line tool, favorite it, so I can kind of, look how much simpler this looks. See, most recent high, you can't really do it down here because it's not a, higher, I just say lower high, right? This is a higher low, whatever. Breaks the structure right here. So it keeps it simple if you want to kind of get rid of the noise for a second. Anyways, so we're in uptrend, but we want to look for a reversal here. So let's hop in the 4 hour now. Okay. I guess I can kind of, what day is this? Friday. We'll do boom, boom, boom. Okay, perfect. Okay, yeah, cool. We can hop in the 4 hour, and right here, we're looking for shorts, right? Because we have our higher time frame liquidity sweep, a tap into the higher time frame PD array, as well as, the fact that we want to go ahead down here and fill these imbalances. Is what I would be looking for. So let's hop in the lower time frames and look for some type of trade. So, oh shoot, the market already opened. Oops. So that's our higher time frame bias, right? Let's just go back here for a second. So you might be seeing this indicator right here, and I'll give it to you guys. Give me a second. All right, so what you guys want to do is head over to indicators, look up ICT kill zones plus pivots by trade for OP and click on it, okay? So this is going to bring up this indicator right here. Essentially what this is, it's telling you the sessions and the draws and liquidity for each of them. So the most powerful draws and liquidity you'll be having for these sessions will be Asia highs, Asia lows, London high, London low, NY higher, NY low. Okay, these are your draw and liquidity. So unless you want to keep the indicator up, if I were you, I would mark out each draw. Guys, remember, hold control to kind of have it auto magnet, so you don't have to take your time out and draw it yourself, because it gets really annoying. And don't just do just those, because what happens if you, let's say, let's just say, what happens if you draw only these guys out, and then we have price keep going up over here, or the opposite, we have price keep going down over here, and you don't know what's going on because you don't have this draw and liquidity marked out. You want to mark everything out, I would say, within a 400 price range, up and down. So as you can see, like London session is about 150 points, Asia is 100, NY can usually be upwards of 200 plus. So you do want to mark it out like 200 points in each direction. So if I were you, right here, like hold shift from market open. This is 200 points. I want you to mark everything out in this range right here, and same for the other side, because that's the kind of volatility you can be expecting during New York session. It's super volatile. It's the most volatile session out of all the available sessions. So I like to have it personally marked. Like I like to double click in, type out, London high, whatever, blah, blah, blah. I like to have it automatically set. I just have a shortcut tool. I'll show you guys how to do that in a second. So this is London high right here. How I do is I type out London high with the text, make the text white, and have it, this is very important, text alignment, make sure it's middle and right. So when you move your, it's almost midnight, I'm having coffee. Just bear with me, guys. Coffee's cold too. So when you're able to like switch time frames and stuff like that, this London high will never leave from here. It's not gonna because if you put it in the middle, look what happens. Center, look what happens. Like, it's like, it'll like move. You don't want like moving on your screen and stuff like that. No, that's you. Okay, just keep it on the left. A lot better. So then you have London low. Boom, boom, boom. Then you have NY low, or sorry, NY PM. It doesn't matter. It's the same thing. Then you have this normal liquidity, right? So I'm gonna leave that blank. And up here we have Asia high. Perfect. Okay, so we have all of our PD arrays marked out. Oh, sorry, PD arrays, liquidity, draws and liquidity. And I like to lock them too. So in case I do ever accidentally, because if I'm moving my chart and clicking all over the screen, what happens if I do this? Like you guys literally just saw me do it like 2 seconds ago, right? So I'd like to lock them as well. Perfect, beautiful. Amazing. Okay, so what did I say our bias was today? Shorts. Why? Because we broke structure towards, if we were to, I can delete the indicator now, right? I'm still going to keep it up, or you can just hide it as well. On the higher time frame, we are looking long. You got to keep that in mind. On the lower time frame, we're looking short, right? Because we did break structure towards the downside with this low right here, right? And this is our little retrace. So that's what I'll be looking for. But if we're looking for longs, which could also happen, today's a little bit of a chopped day. You can't really tell which way price wants to go here. I'll kind of try my best to explain though. I can't go to the 5 minute.